Hi, welcome back to Law and Such. Now we're going to talk a little bit about everybody's favorite topic, taxes. Taxes aren't so bad when you know how to make the IRS happy. So let's talk about a few things. First of all, always consult a CPA and or an attorney if you get into a gray area regarding taxes. It's just best practices. I know they're expensive, okay, but it's something you maybe want to save up for and look at as you grow. Their input, their insights, can potentially save you a lot of grief down the road. Again, especially as you get larger. But let's talk about three key points here. First of all, expense wisely. Okay, you want to avoid an audit, and you really want to avoid reclassification as a hobbyist. Okay, let me address the latter real quick. Don't try to write off all your vacations. Okay, the IRS is going to see that you generated, $50 in commission in a year, and you wrote off $3,000 in travel for, business purposes. They're going to reclassify you as a hobbyist real fast. Avoid that, and avoid audits in general. So use home office deductions, travel rebates, and gifts and entertainment deductions, especially those, very carefully. Keep your records, including receipts, time and place that the expenses were incurred, and business purpose. I'll summarize a little section of law. I really don't want to, have to reference everything, but it was a 2015 case. It was Lee versus Commissioner, and the tax court ruled against Lee, a private person, after she claimed that expenses for cruise travel with her companion enabled her to advise protective or prospective travel agency clients. She claimed that any information obtained through her travel was useful in broadening the knowledge that she would convey to others. Well, she didn't really document it well. And the law requires that each element, in other words, everything that you're trying to deduct, be substantiated, proven, supported, like with receipts and so on, at or near the time of expenditure. So keep your receipts, keep a journal, keep photos. You have to be able to show that you were there to learn about the property, to learn about the destination, and that you expended reasonable effort to garner that benefit. Don't just come home with a shoebox full of receipts and say, well, I went to, Disney World and it was a learning experience. They're not going to believe that. You took pictures and you got a journal, you got notes, you got all that. Now you've got a shot at defending those deductions. Another thing to consider as you expense, as you spend, is you must have a written contract with sub agents. Just as we have a contract with you, so should you have a contract with your sub agents. Folks, just for reference, and coming up on 20 years, we've been audited 4 times, I think, 3 or 4 times. Not for our finances, but they wanted to see contracts for every single agent, independent contractor that we had, and we were able to produce it. So if you ever wonder why we're so sticky about your contracts and documents and all that kind of stuff, that's the number one reason, or one of the number one reasons why. Here's another thought for you. Reserve at least 35% of your revenue for taxes. Remember, you're not just the employee here, you're the employer too. So your employer, when you have a traditional job, pays taxes on top of what you pay. Okay, so reserve at least 35%. I would suggest 50% of your income to pay for your taxes. And then, you want to make sure as you start to grow and whatnot, that you consult a CPA. Okay, you may be obligated to quarterly reporting and other considerations. Another thing to remember is that, we live in a modern era, right? Use software such as Expensify or QuickBooks or something to track and manage your income and expenses. It's going to make your life so much easier. And if you get in the habit of doing it sooner rather than later, it's going to be just that, a habit. It's something you're going to just do automatically. It's part of your daily routine. And man, will it make your life easier down the road. And again, as I often tell people, don't put the cart before the horse. Okay. Look, frankly, we don't report income if it totals under $600 per year. We're not required to. The IRS doesn't care if you made $600. That's little side income, right? So if you made a couple $100 in a year, it's not that big of a deal. You don't have to report it, but don't report expenses against no income. Okay. So again, don't put the cart before the horse. There's no need to report anything if your income's under $600 a year from a particular business venture. Up next, we're going to talk a little bit about E&O insurance.